Good morning, good afternoon, good evening, everyone, depending on which parts of the world that you are joining us from. But of course, for us here in Ghana, it's a very warm, extremely warm afternoon. So good afternoon from Accra, Ghana. And thank you so much for making time to join us on this webinar. This is the CGS webinar, which is an initiative of the Corporate Secretarial and Training Services Limited. In the past few months, we have been bringing together or putting together a panel of experts to discuss various issues relating to the governance of institutions. About 2 months ago, we did a similar webinar, which was on directors' duties and the various liability regimes around the world. Today, we have a very interesting subject to discuss as well. And the topic or the theme for this afternoon's webinar is corporate governance as a tool in ensuring effective AML CFT regulatory compliance. Now, AML CFT compliance is an area that is clearly very fundamental and critical to the success of institutions. And this is for so many reasons. When you look at the threats that these ills pose to money laundering, poses to the how well institutions can do, and in fact, to the entire financial system. It is important that we look at how institutions are able, at the governance level, especially at the level of governance of institutions, how well institutions are able to promote and to ensure that they are complying with AML CFT regulations. And that is the very reason why this afternoon we have put together a wonderful panel. These are ladies and gentlemen who know everything that there is to know about AML CFT compliance, not only because they actually practice this, but also because they have lived it. And as I introduce my panel in the next few seconds, you would understand just what I am talking about. So again, thank you so much for joining us this afternoon. We are very grateful for your presence. My name is Gertrude Amoko-Ama, and I'll be in charge of the moderating of this discussion. So I'll delve straight to introduce our panel members. First, we are joined by Dr. Joseph France. Dr. France, as he's affectionately known by many of us, is the former head of financial stability at the Bank of Ghana. And I know that Dr. France is also currently a partner of Franz Norman and Associates. Doc, I hope I got that right.
That's right. Thank you.
Thank you for joining us, Doc. We are so grateful. We are also joined by Mr. Samuel Sapong, who is currently the managing partner of ORG Resilience Consult, and who brings to the table so many years of governance experience. Thank you so much, Mr. Sapong, for joining us. We are grateful for your presence.
You're welcome. Thank you for joining.
Thank you. Also, we have my very good friend, dear sister, very lovely person by all standards, Swad JB Amegavi. She's a legal officer. Swad is such a lovely person. She's a legal officer with the Financial Intelligence Center at the FIC. Swad, thank you so much for making the time. How is the team at FIC?
Everybody's doing well. Thank you for having us.
You guys are super. You are working so hard. You are doing, and it never stops, back to back to back, but you are really holding the flag of Ghana high. Thank you for the hard work.
Thank you for the commendation. We're grateful.
Great. Then we are also joined all the way from South Africa by Lebohang Thobakle. Lebo, you know that this was really, there was a high likelihood of this happening. I've given it my very best. Please forgive me, and I'll give you the opportunity to, perhaps pronounce your name again to our audience. But Lebo, as she has made me know I can call her, is Associate Director for Anti-Money Laundering Compliance in KPMG, South Africa. Thank you for joining us from SA this afternoon, Lebo.
Thank you so much for having me. I'm really delighted.
Okay, so
and it is Lebohang, so yeah, but you got it right.
Lebohang, perfect, beautiful name. Thank you so much. So really, I want us to begin this discussion by setting this whole, subject matter in context. One of the most basic questions that I want to believe our audience would ask first is why is it so important that there's board oversight in promoting or ensuring that there's AML and CFT compliance within institutions? And I'm going to I'd want to start off with Mr. Samuel Sapong. So, Mr. Sapong, one of the things that our audience have asked us to ask is why is board oversight in ensuring that this AML CFT compliance in institutions so important? What really is the reason why this is an important subject that boards must be concerned about?
Yeah, thank you, Gertrude, and hello to the attendees of this webinar. It's important under normal corporate governance. The board basically is responsible for setting for strategic direction. And amongst these things, in terms of strategic direction, the board basically oversees management to make sure they implement the strategies that have been approved by the board. And more importantly, under the AML CFT regime, boards are legally liable for infringements of the various acts. And what are some of the acts that and legislation or regulations that cover AML? We have the Anti-Money Laundering Act 2020, which is Act 1044, which imposes fines and sanctions as well as penalties, as well as which may include imprisonment as well. There's Anti-Money Laundering Act of 2008, Act 762, which also deals with terrorist financing. And companies have to be aware of this and avoid related offenses. There's a Financial Intelligence Center, which is a body that has been set up to basically monitor this whole area. And companies must basically provide information relating to what they require and for monitoring transactions. Then, of course, if we get into the financial sector, we have the Bank of Ghana, which provides supervision of anti-money laundering, and the banks and financial institutions are required to comply with those. Then you have the Securities and Exchange Commission of Ghana that also imposes sanctions for breaches. So ultimately, the board is responsible for making sure that the institutions that they govern or they have oversight of basically comply with these laws. And as I've indicated, there are breaches and there are sanctions associated with breaches of those. So what are the key roles of the board in terms of making sure that their institutions are very compliant with all these laws to avoid damage, reputational damage to their institutions, as well as ensuring continuity of their operations. So but the board basically has to set the tone right from the top, and that involves approval of the risk management practices, which may include, which would include AML, CFT risk appetite. So they have to set the appetite. What can the institution, what kind of risk the institution can take given their capabilities and their strategy, as well as the board must prioritize CFT and AML. Once they prioritize that, they will then be in a position to provide the necessary resources and strategic direction to management to comply with. So unless the board prioritize that, the tone that the management typically will just tick the box and may not really perform the functions that are required by these regulations. They must approve the AML CFT policies as part of the process to ensure that there's compliance with all the relevant acts. For financial institutions, for example, they must appoint the key people to spearhead CFT AML functions, which is the anti-money laundering reporting officer, as well as the head of compliance. These are key appointments that the board approve. And the board must provide resources, of course. Implementing CFT AML requirements basically involves a lot of resources, and the resources must be provided in budget in terms of financing, in terms of staffing, and these resources must be provided. Some of the systems are very expensive, and typically boards are a bit hesitant when it comes to spending large amounts of money in terms of acquiring the appropriate system. So that is important for the board. Then, of course, the board must oversee the compliance function, make sure there's independent reporting into the board, the head of compliance, as well as the anti-money laundering reporting officer, to make sure they are on top of it. All these are required in order to make sure that the board or the financial institution or the institution comply with relevant laws. So the board has a key role to play, and it's important as they provide strategic direction for the organization.
Thank you so much, Mr. Sapon. I mean, indeed, that's a very detailed explanation of the board's responsibility or role when it comes to ensuring compliance with AML CFT. And one of the key points I take from you is the need for boards to actually prioritize AML CFT compliance. In the course of the webinar, we'll be taking some information from the FIC as to their observations as to whether boards are indeed compliant. But before I move on to Dr. Franz, Mr. Sapon, I just wanted to quickly ask you, what could be some of the potential key challenges that boards face in actually ensuring that the roles, the responsibilities that they have in relation to MLCFT compliance, which you have outlined so brilliantly, is actually brought to fruition? And how can these challenges be addressed? In your earlier remarks, you did mention the fact that some of the systems that are needed can be so expensive, and that is, easy to understand. But quite apart from the cost that is involved and the compliance cost that is involved, what are some other, perhaps one or two other key challenges that boards actually face in ensuring that they are performing their roles as regards AML CFT compliance?
Thank you, Gertrude. I think one of the key issues is that, as you know, board is made up of different individuals with different skills, and you may not have all the skills in terms of risk management or AML CFT skills available on the board. So we have an issue of limited knowledge by some of the board members, which basically then limits the oversight responsibility, because if they don't understand the specific area and management does not provide the necessary reports that in simplified form, then they may not be in a position to understand and make the right decision. So that is a key issue. So at least to address this issue, one or two members of the board must have a risk background. And also, of course, there's the annual education of board members in terms of AML and CFT regulations. So there must be regular, periodic education of board members so that they understand the area in which they are basically operating. Okay. In terms of resource constraints, basically, as I've indicated, the issue is budgets. And in my past experience, of course, management will bring the requests for approval. And some of these systems, you may have to basically prioritize them over a period of time. So about 2 or 3 years, in order to have the adequate resources to implement these solutions. And more importantly, it's not even providing the solution. Implementing a system basically takes time. I mean, some of us may have been involved in many projects, and the vendors may tell you it's going to take maybe 6 months to implement, but you end up with these projects taking close to a year. And so you may not be able to implement all the systems at a go. So that is important. Then, of course, the weak oversight, because the board basically may have a lot of issues to deal with. And unless, let's say, the AML and CFT is basically prioritized, then the board may not have the full knowledge in terms of what is happening in the organization. And to address this, basically, the board appoints different subcommittees. There's going to be the risk committee or compliance and committees that may have the time to delve into the various issues and bring it up to the bigger board to basically review the issues and address them properly and make the correct decisions.
Okay, thank you so much, Mr. Sapong. Thank you so much. That is very detailed. Dr. Franz, I'd want to come to you. You know, Mr. Sapong earlier spoke about the importance of board diversity, and I think that generally in current corporate governance debates, a lot has been said about the need to have diverse boards. But I just want you to add something, you know, for us to educate the members of the public or the audience that have joined us today. How really important is board diversity when it comes to AML CFT compliance? And really, what is the impact that, you know, what is the impact of having a diverse board on AML CFT oversight from your perspective?
Right. Thank you very much, Gertrude. You know, like we always say, diversity is the spice of life. And we all know that variety drives better decisions. And so a board with diversified, if you like, use the word portfolio or members, obviously is a very good board, and that will help the board to view things from different perspectives. And with that experience and with different experiences and different thinking, independent thinking and all that, it means that whatever decision comes out of that board will be above board. So it is obviously very good for you to have the subject matter person there, and not necessarily that, but to have various people or various board members with different backgrounds so that they can view things from different angles. You can have all of them being more of AML, compliance, and what have you. But if you are not careful, that will be skewed. So it's better you have people who may even think like laymen, you know, and others who have other backgrounds, which is unrelated to AML CFT. It may be related to, if you like, operational issues other than AML or compliance issues. It may be related to governance issues other than, you know, compliance, and so on and so forth. So board diversity is very key. And that is why regulators will always want to, you know, have boards of different backgrounds, not necessarily backgrounds which are very related, but of course, it shouldn't be far off the subject matter, but it should not necessarily be persons who have the various, the technical know-how of the subject matter.
Okay, thank you so much, Doc. That is very well understood. Now, again, based on some of the responses that Mr. Sapong gave with regards to the importance of board oversight in this very subject area, and also some of the key challenges which he has very well outlined. But one would also want to ask, how can institutions promote or foster a culture of AML CFT compliance? And even more importantly, what role does the leadership of boards play in this regard? In recent corporate governance discourse, a lot has been said about the importance of corporate culture, because at the end of the day, Mr. Sapong, for example, took us through, you know, a bit of the regulatory framework for anti-money laundering in Ghana. And we can see that, yes, it appears that we have a really, you know, solid regulatory framework. But that having a solid regulatory framework does not automatically translate to compliance. So some have urged that perhaps what we need to do is to have a culture of compliance within these institutions. But how can that happen? I know definitely it's not going to be an easy thing, but how can institutions, you know, foster or promote that culture of AML CFT compliance? And again, what role does the leadership of the boards have to play in this in terms of the board chairperson? Thank you.
Right. Thank you once again. As you are aware, culture has to do with beliefs and values. And hence, for organizations to foster AML compliance and ethics, they must necessarily embed AML culture into their values and incentive systems and their daily operations. Not just consider them as policies to be observed, but they should be they should live it. Essentially, leadership must set the tone, like Mr. Sapon said, by treating AML as a strategic priority to be enforced. It should be stated clearly that this is what we are doing. It should be part of their enterprise risk management systems, and they should elevate this to a strategic level. And what that means is that they should treat AML or financial crime risk as core business issue that shapes decisions. And it should not just be compliance requirements that they are just doing to satisfy the regulators, ticking the box, and they must live it. It should be part of, so if they are going to, for instance, promote, products, what have you, the issue should be whether that product has incorporated all AML issues. If it has to do with, let's say, performance of staff, or of staff, is it only based on? Should it only be based on growth or the increase of what have you portfolio that, or the quality of compliance, including AML and CFT, is something that has been embedded in the organization. It should be part of their culture. They should live it. It should be part of their values. When things are part of your values, you hardly leave them behind. So the top hierarchy, and for that matter, leadership, must ensure that these are part of their values and their ethics, and they live with it. Else, you will see it as just ticking the box. We are doing something to satisfy the regulator and nothing else.
Thank you so much, Doc. I mean, that's indeed a tall order for boards, but it's also very, very doable. And if Ghana is able to make giant strides in its fight against money laundering and related offenses, then obviously boards need to be able to do better. But I'd want to come to Swad, who is a legal officer with the Financial Intelligence Center, I beg your pardon, with so much experience in this area. She has been with the FIC for a long time. But I'm wondering, Swad, from your perspective, and against the background of all that Dr. Franz and Mr. Sapon have said, are there any observations that you have made about the levels of oversight that Ghanaian boards really have over AML CFT threats? Does it really appear to you that these things that we are discussing are really understood well enough by boards, or it looks as if we are not there yet? What would you say to that?
Thank you very much, Gertrude. Just piggybacking on what has already been established, as they say, standing on the protocols already. That's what they say. Yes. From where we sit at the FIC, we have found that in the financial sector especially, it's a highly regulated and well-structured part of our economy. So naturally, you'd find that they embrace knowledge regarding AML CFT better. And because of that, you see in the selection of who to serve on their boards, they are more careful and particular about individuals who have a background which would relate either directly or indirectly to AML CFT. So yes, in the more regulated, well-structured parts of the economy, we see that there is a good understanding of the need for AML compliance. But in the other sectors, the designated non-financial businesses and professions, the car dealers, real estate, dealers in precious minerals, that sector of the economy, we still have a lot of work to do, but that's not ruling them out either. We have noticed some of the players or actors in that sector do constitute boards that are knowledgeable, but when we compare the two sides, we see that there is more work being done, or there's more understanding in the financial sector. Just to give a short answer, I guess.
Okay. Thank you, Swat. So, I mean, this is a very interesting observation. I'm wondering at this point, but Dr. Franz, for example, this goes to tell us something, I think, that it appears as if, like Swat is saying, for the highly regulated sectors, they appear to be much more compliant as opposed to sectors that are not as highly regulated. That's a very interesting observation that I think that for various sectors out there we need to pay attention to, because like Swad rightly observed, for the financial sector, for example, and Doc is the best person to attest to this, series of rules and regulations and laws that have to be complied with various regulatory mechanisms that the regulator, the Bank of Ghana, is ensuring that they are actually regulating these institutions within that sector. But we can't say that for all other sectors. So that's a very interesting one that really caught my attention. Thank you, Swad. But again, against the context of what you do at the FIC, what are the key, or the very obvious AML CFT risk that institutions in Ghana need to focus on? Because you see, one of the reasons why we are organizing this webinar is also to put that education out there. For all you know, there may be people who have joined us who are not even aware of the risk that their institutions face when it comes to AML CFT. So what are some of the risks that institutions, especially in the context of Ghana, face in this regard, so that they can look out for it?
Okay, so I guess the first thing that I would say before I go to detail the risks is to talk about the fact that when we are talking about anti-money laundering compliance, there is a duty on us within our sectors to approach it by assessing and understanding the risks that we are faced with based on the industry we belong to. So we've observed, for example, that the real estate sector is a high risk area because of the large cash transactions that go on there. And as a result of that, there is a lot of advisory directed at the real estate sector, enjoining them to be more critical when it comes to know your customer due diligence practices, and also ensuring that we don't fashion products or fashion channels in the real estate sector that would make it easy for individuals to anonymously acquire property and it can't be traced. So that's what I would say to begin with. But generally, I think that the very fundamental risk has to do, first of all, with the kind of customers. We need to start from the very bottom when it comes to trying to enforce AML, trying to combat AML risks in our sectors. And the most basic, like the basic bottom line when it comes to that is your KYC, know your customer due diligence. So we realize that a lot of the industry actors are not paying attention to ensuring that they have enough details on the individuals that they are engaging with. And so that is a source of risk when it comes to the DNFBP sector. And then when it comes to the financial sector, what we realize now is that a lot of the products that are being generated are more digital technology driven. And as we have come to learn, technology is a double-edged sword. It has its good side, it has its bad side. So we need to begin to understand that a lot of people are taking advantage of the fact that we have gone digital to also perpetrate their own crimes or wrongdoing. So I think that that's one thing we need to look at. The fact that now the world is progressing generally, so we need to begin to understand the vices that the technology we are using come with, and therefore put in the necessary mitigating measures so that we are not taking advantage of. Yeah, basically.
Great, great. Thank you so much, Swad. That's so much education in just a few minutes. Thank you for that. We'll be coming in the latter parts of the webinar to the issues concerning technology, and really, I like how you put it.
Yeah.
It being a double-edged, so it has so many benefits, but at the same time, can also turn against us. But I'd want to move to Lebo at this point in time. I mean, we'll come to the compliance issues, and because she does this on a daily basis, I definitely want to ask her about some of the compliance pitfalls. But before that, I want to find out, Lebo, from a more general perspective and from your compliance experience, how important is financial crime compliance generally for businesses, particularly those in high-risk sectors? In Ghana, for example, like Swat said, real estate has been identified as one of the high-risk sectors. So generally, not just money laundering, but other financial crimes, how important is complying with, avoiding or fostering these financial crimes important for businesses?
Thank you. Thank you so much. And I must say, I like how the lay of the land has been laid out by former speakers, because when we speak about tone at the top and we're talking about the right regulation, that also shows us the importance of what we're doing, right? But I'll focus particularly on financial crimes as a whole and not necessarily just on AML. So predominantly or traditionally, there's always been a focus on the financial crimes from a traditional sense, right? And it has always been inherently risky in financial businesses, your banks, your investments, and your insurance. That's from a traditional point of view. But we've seen, obviously, the evolution of that with the financial crimes. As financial crimes evolved, we've seen how more and more vehicles or businesses become very susceptible to financial crimes. So there's been that much of a shift from looking at only the banking industry, saying that this is very high risk, to inclusion of what Swad spoke about in terms of other professionals. And essentially, what the perpetrators look for is those professionals that have the right know-how. In this instance, it means that what can they leverage off as a professional over and above? They know traditionally banks would be the vehicles, but the likes of your lawyers, we would have never back then thought that lawyers would actually be people that would be used as part of organized crime, right? For them to advise them where to put the money, what the regulation says, what are the terms, and how to maneuver them. People like your tax practitioners, we would have never thought as well that they could be very instrumental in money laundering or being used as vehicles of money laundering if they're not alert. And again, unfortunately, your likes of your auditors. So in saying that, what I mean is the shift has been, moved quite vastly from traditional banking and investments and financial services into your other professionals. So having said that, your higher sectors has seen a huge shift, like I've said, and we've seen also in South Africa the spotlighting of NPOs as high risk factors as well, or high risk companies that we need to be looked at. So how we look at high risk really is in the context of how susceptible are you to being used as money laundering? And it's not just something you can thumb suck. It looks at the type of systems that you can that you have as a business. It looks at your risk tolerance as well. I mean, you can be a big company but be very risk averse, or even worse, not even have the right systems for you to be curbing financial crime. And in that, we see that it's not just only sector specific, but it's more entrenched in the systems that you put and your willingness as well to be accountable to curbing financial crime. So going back to your question on the importance. So the importance of financial crime really lies in how you deliberately and intentionally make it important. So in essence, it can only be as important as you want it to be. And going back to the board discussions that we had earlier, where the tone at the top was actually analyzed as well. If you at the strategic level as a board think that financial crime compliance is the essence of your business because there is reputational risk, there is ethical risk, then it will definitely be important. But let me maybe hone in on, because we are talking about governance, I wanted to just hone in on the traditional definition of governance from an ISO 37000, which essentially says that good governance is when there is a system by which an organization makes and implements decisions in pursuit of its objectives. Again, it goes back there. If it's not part of your objectives, it will definitely not be important. But maybe let me hone in on, again, going back to compliance. If it's not part of your strategic objectives, like I've said, then it won't be that important. A practical example, and I think Doc alluded to it earlier, where you've got compliance as an agenda at a risk committee. You've got it, and you get there and you start presenting on it, only to find that it is not even a hot topic, or it's not even a burning issue. Even worse, sometimes you find that they say let's take the pack as read. It shows already in there how important compliance is regarded at a board level and at a business level that we need to be considering. So having the right airtime at the right committees as well amplifies the importance of financial crime at that matter. Now, although we've spoken at a business level, one cannot overlook national level. Why we do what we do. It's not just for businesses. When we look at a national risks that we're looking at, I mean, we've seen off the grey list, on the grey list, being mutually evaluated and the likes. If you look at it from an ecosystem and an economic crime scheme perspective, you'll start realizing how important the role of compliance is, or complying to AML, not just at a business level, but at an economic level. If I can just throw in some stats there. If we look at global financial crimes, how that aids into the global GDP, that actually accounts about 2 to 5% of the global GDP. That essentially means that that's money going in, illicit money, in and out of the economy that affects our economy. 2.2 to 5% of GDP, global GDP, is quite a lot. So we're circulating a lot of, or perpetrators are circulating a lot of illicit funds there, where we are not even privy. Some of us can't even account to it. So maybe just to wrap up, it's not just about business importance, it's also about national importance. And that's how usually we narrate it when we tell our businesses on how important, not important we are, but how important compliance to financial crimes is. Yeah.
Right. Thank you so much, Lebo. That is so useful. I mean, so what this means is that, look, the effects of financial crimes are real from the statistics that Lebo just shared with us. These are illicit funds that are being channeled into or going into other places, which, if it were being used for the betterment of our economies, we would have seen real progress. So really, this is something that affects all of us. And again, on the issue of DNFBP, so real estate practitioners, lawyers, accountants, gaming, those in the gaming sector and what have you, we really need to be aware of how we are being used as a conduit to carry out some of these financial crimes. And that is a reason why webinars such as these are being organized. But Lebo, again, before I go back to Mr. Sapong, I just want to find out quickly, what are some of the key compliance pitfalls? Because we've said a lot about the role of boards, senior management, and ensuring that we are actually complying with AML CFT. But what are some of the common pitfalls? And there are so many, board members or key management, senior personnel that have joined this webinar. What are some of the pitfalls that they are making and which they should be looking out for? In just about some 2 minutes.
No, absolutely. And I will wrap it up because there is obviously quite a number of pitfalls. But given that our audience is more board focused as well, I'd like to reiterate the sentiment that was shared by Doc in shifting really the accountability from the board to compliance officers. Usually, we find that when it comes to complying to certain regulations, the board says, "Well, I appointed you, so it is your job," which is not always the case. I mean, companies obviously need to know from a good governance perspective that compliance is there to enable them in complying with the right regulations. And ultimately, as Doc has also said, the responsibility and accountability will also predominantly lie with the board, irrespective of who you have appointed, even if you have the right capabilities. Now, having said that, this particular area of AML obviously does require a certain level of competency. However, it doesn't necessarily mean that we don't need boards and executives that have the right prudential knowledge just to be able to decipher what financial crime risks are and what risk appetite they're able to apply there. So literally shift from the focus on compliance officers is your job to board taking accountability. The last one that I'd like to mention, amongst others, obviously, is the application of the right risk-based approach. From a compliance perspective, I don't think we're applying that correctly, honestly. I mean, the regulatory landscape of AML has really equipped us to be able to apply our minds and principles and apply a risk-based approach. But sometimes we fall into default of rules-based. And what I've seen is that it's because we are not able to conduct proper business risk assessment. Mm-hmm. And conducting business risk assessment means that what I've applied in a bank will not necessarily work in an audit firm, for instance, even though I'm using the same regulation. So we need to equip ourselves in knowing what a business risk assessment is, so that it can align exactly what control you're trying to curb. Right. There's risks there, but then we need to get to the feel of actually conducting and implementing the right business risk assessments. I think that's where we fall short there, where else the regulation has actually enabled us. Yeah.
Okay, so thank you. So, I mean, I think the key point is that we need to be aware of the peculiarities or the uniqueness of where we find ourselves, so that we can conduct the kind of risk assessment that takes into consideration our unique circumstances as an institution. Thank you so much, Lebo. Mr. Sapon, I would want to quickly come back to you and to ask this. Most of the time for many boards, the focus is on, business growth, setting the right strategic vision to be implemented by management so that we can make the kind of profits that members or shareholders want to have at the end of the day. But against the background of all that we have heard this afternoon, it looks as if, or it is the case, that AML CFT risk management is also very important. So for businesses, especially in high-risk sectors, and we have just been told about some of these high-risk sectors, how can boards balance the business growth, which seem to be the focus most of the time, with AML CFT risk management? And perhaps once you are done with that, you'd also want to address the issue of the information asymmetry. Are boards adequately informed about the AML CFT risks? How are they? Do they have enough information to be able to take charge of setting the tone from the top? So firstly, really, how can boards balance business growth with AML CFT compliance? And secondly, how does this information asymmetry, when it comes to being adequately informed about the AML CFT risks, how can boards overcome that? Thank you.
Yeah, thank you, Gertrude, for the question. In terms of balancing growth, with regard to the AML and CFT requirements, basically comes back to board the risk appetite for the institution. What area does the institution want to get to in terms of products, jurisdiction, and let's say channels? So it's very, very important for the risk appetite to be defined upfront, which is the responsibility of the board. Once that is defined, then subsequent growth basically has to be aligned with the risk appetite. But under no circumstances should growth be at the expense of breaking the CFT and AML. So that has to be set up. Now, there's also a risk-based approach whereby the due diligence that is required for certain sectors basically enhanced, which means that in environments, there are policies and procedures for deep dives in terms of due diligence. And if, let's say, it's less risky area or a less risky product, basically there's a approach. So that you don't end up having one set of criteria applying to your high risk area as well as your low risk area. And that basically allows for in terms of applying the rules. It's so important to be able to integrate the CFT and AML requirements in decision-making upfront. So if, let's say, a product is being developed, for example, we have to make sure the head of compliance has reviewed them and make sure they are compliant with those. So how can we proactively deal with some of these things? I take a practical situation whereby we've basically decided to go into, or a firm has decided to go to a high risk area. The requirements must be defined upfront. And let's say the relationship managers are going to basically prospect for business in those sectors, must have that information and proactively talk to the clients, prospective clients, about these requirements and find ways in terms of how they can provide the required information and meet the CFT requirements or AML requirements of the institution. So it has to be a proactive approach in terms of doing that. Gone are the days where risk management was always a hindrance in terms of basically product or sales. Basically, in modern organizations currently, risk management basically enhances the process of prospecting, which means that the risk criteria that are applied must be made available to the salespeople, and let's say solutions that the risk identified and prospective solutions in terms of mitigating those risks identified upfront, and those are basically provided to let's say the salespeople or the relationship managers in order to be able to manage the businesses that they are going to prospect for. So those are the key things that one has to look at. Then in terms of the information, basically there must be standardized reports that the board must require of management to provide on a periodic basis. And these standard reports must have certain metrics that are simplified, simple, and clear to understand. And these must be provided on a regular basis. Secondly, must have empowered clients as well as ROs. How the activities must not be interfered with. They must be empowered to report all the findings directly to the board, if possible, without interference. So that part is so critical. The other part is, I've actually spoken about, is making sure the dedicated board subcommittees, the risk committee or audit and compliance committees, basically have the necessary time to really deep dive into the findings of the audit, internal audit, as well as the head of compliance, so that that information is shared to the broader team in a summarized form and clearly so that they can act on it. The other important one, the fourth point, in terms of board getting the right information, is independent assurance. So we have this external auditors basically auditing the organization, and in their management reports may highlight certain things. There are the regulators who come in to basically do their regular inspections. If I may take the Bank of Ghana, as far as financial institutions are concerned, Bank of Ghana does its annual or biannual audits of various institutions. And basically they would look at the AML CFT program and basically report on the quality of the program and any breaches that may occur. And thirdly, of course, we have the internal audit team that basically would go in and assess the compliance function and basically report on that to the board. So the board has various avenues in terms of getting adequate information to be able to manage the AML CFT program of the bank or the institution.
Okay.
It's very important that the board is proactive in terms of getting this information and not to find out these issues only after penalties are basically presented to the organization, and then we have to go to board for approval.
Thank you so much, Mr. Sapong. Thank you so much. Those are very practical points that you have shared with us. So board members that have joined us, please, from what Mr. Sapong said, it's important that you are proactive in ensuring that you are also getting the right information. Let us not wait until, the worst has already happened. But I want to quickly come to Dr. Franz from the perspective of someone who has been with the regulator for so many years. Earlier on, SWAT, for example, revealed to us what seems to be a correlation between the nature of regulation that is being conducted in a particular sector and the levels of their compliance with AML CFT regulations. But when it comes to regulation, are there certain regulatory challenges that hinder successful AML CFT compliance? And even if there are, how can some of these regulatory challenges be addressed? Because I think in one of the earlier comments, if I'm not mistaken, I think that it's Lebo who said to us that, look, we cannot only approach this subject matter from the perspective of institutions, but we need to look at the national effect as well. And that is where regulators become important. So, Doc, are there certain regulatory challenges that prevents or, as it were, mitigates against AML CFT compliance? And if there are, how can some of these challenges be addressed? Thank you.
Right. Thank you very much. Before I come to that directly, we talked about other challenges confronting the board. And of course, yes, other speakers have tapped on that sufficiently. But I want to mention that currently there are complex and evolving regulations which is affecting the whole ecosystem of regulation. We have moved into an arena which previously wasn't there. So we have virtual access service providers, for instance, regulation, which has become the norm now because we are moving into areas that we can now have pen and paper to be looking at. So it is important. This has become a very huge challenge for regulators and, of course, for the practitioners themselves. There's also the issue of high compliance cost, that is becoming increasingly difficult. Of course, with even all these evolving areas which are coming in, it's becoming difficult for
hello, Doc, can you hear us? We seem to have lost you a bit.
firms.
Hello, Doc, can you hear us? You seem to be breaking up a bit.
What are the outcomes? What outcomes are we having? Is it okay now?
Yes, good. It's perfect. It's much better now.
I think is it okay?
It is.
Otherwise,
It is.
I'll have to go.
No, it's fine. We can hear you
Right.
now. Can you hear us? It's fine.
So like I was saying, there are other challenges that we are confronted with. I mentioned the fact that we are going to arenas of IT and other areas of IT, and so that brings to the fore the issue of the virtual access service providers regulation, which has become topical now, and also introducing high costs because we have high compliance costs, especially to some institutions, and also the issue of data limitations. And that brings to the question directly that are there some challenges? Yes, there is always the issue of regulatory tension between AML and financial inclusion, for instance, or institutions over regulated, for which they may be excluded. So what we do, we come with tiered regulation, for instance, so that we don't exclude the informal sector, the SME, and also the rural population, for instance. We come with proportionate regulation so that we have high risk areas, especially in the complex institutions looked at, and not that we're still looking at just compliance where you have a lot of SCR submitted to FIC, but the intelligence base of or outcome of some of this is just minimal. And so are we just, giving all sort of things to the FIC, and we don't have much to deal with. And so are we compromising on effectiveness in this regard? And how do you deal with that? I think earlier speakers have mentioned quite a number of them, but I think that training is very, very key in all these things, that at least apart from focusing on the high risk areas, board should be asking the relevant questions. What are the risks involved? It's not just give us the reports are churned out or generated, and once we look at it, we tick the box, and that is it. What is the risk? Are there some risks that we are not seeing? And so on and so forth. Relevant questions must be asked so that we don't find ourselves just there is suspicion of a transaction. We don't go beyond it. Then we just send them to the regulators or the authorities. That way, we will lose out on most of the issues. But we must look at the structural issues and how do we deal with them, and so that we don't over-regulate, and we also don't exclude such institutions.
Right. Yeah. Thank you so much. Doc, it's interesting that you mentioned some of the broad regulatory approaches that regulators tend to use. For example, the tiered and proportionate regulation. And this against the background of your earlier comment on the importance of avoiding regulatory tension. But I'd want to find out, quite apart from these, what are some of the ways that regulators can actually support institutions in implementing effective AML CFT compliance frameworks? Because many a times the criticism is that, look, we are being overregulated. There are so many rules that we need to comply with. It's becoming too much. These lead to high compliance cost and what have you. But from the point of view of someone who was with a regulatory institution where we've had many successes, from what we've heard from SWAT, that for the financial institutions, it appears as if the regulation there is quite very tight, which aids in high compliance. But what are some of the other ways, perhaps one or two in just a minute, if that is possible? How else can regulators support institutions in their aim to implement effective AML CFT compliance frameworks?
Thank you. I think one that comes to mind is feedback. As we regulate and as information is brought to us, we need to give big feedback to the public or to the regulators, to the institutions. Feedback that will not compromise intelligence. Feedback that will be timely. And so we are not going to go into details. We are not going to be anonymous feedback and so on, so that this can help deal with bringing all manner of things and losing out on issues, very fundamental issues. It's also very important that the regulators will, with their experience that they gather, they will organize frequent training or refresher to the regulators and get some of these things over to them. and discuss some of these things. It's also very important that we come out with guidance notes. As the system is changing, you find yourself every now and then coming out with one regulation or the other, and it's becoming more and more complex. So sometimes it's important to clarify issues through circulars and guidance notes for the regulators or the institutions to be clearer as to what they are supposed to do. Most of the time you have, or sometimes you find out that regulators leave the regulators or the organizations or the institutions in the dark, groping in the dark as to what they should do. They should come out with their own levels as to how they will deal with the issues. They just throw out the issues to them. But it's good to always come out with guidance notes and to guide the organizations, to guide the institutions that you regulate.
Okay, thank you so much, Doc. Mr. Sapon, this is a quick reaction that I had from your earlier comments on the importance of information. So a colleague just reached out to me in reaction to that perhaps regulators, not perhaps, he says that regulators must send the sanctions and notices directly to the board and not through the MD or the companies, because they've had situations where MDs hide such information from the board. Now, this is a very serious thing for anyone to do. Our management personnel, let's not do that. That is not good at all. Anyway, so Swad, if I may come to you at this point, Doc left off on the point of regulators being able to provide trainings to the sectors that they regulate. And I know that as the FIC, this is something that you do a lot. So I just want to find out from you, I think that training clearly we would all agree is very essential if we are to ensure AML CFT compliance. But what should be the nature of trainings that should be provided not only to boards, but even to employees? And quite apart from just having the trainings, how can institutions actually measure the effectiveness of whatever AML CFT trainings that they are having? Because it shouldn't be just about ticking the box and having the trainings, but how do we know whether we are having any effect out of these trainings? Thank you.
Thank you. So the nature of the training, I'll take it from two angles. I'll take it from the subject matter angle, and then I'll take it also from the targets of the training angle. So first of all, what I would say is that as an institution, once you identify yourself as an accountable institution in terms of the Anti-Money Laundering Act, and that's Act 1044, then you should know that there is a need for the whole institution to have fundamental understanding of what money laundering is, what brings money laundering about, what are the basic red flag indicators of possible money laundering, how your institution comes in when it comes to money laundering. So for example, if you are a fintech, you should be able to understand what the vulnerabilities in that sector are. If you are a precious dealer in precious minerals, you should be able to understand. That's basic, fundamental for the whole institution. And then you'd also want to talk about the role-specific training. So apart from the general knowledge that you'd want to give the whole institution, you'd also want to talk about the different roles. If you have an anti-money laundering reporting officer, you need to understand that there's a need to invest so that the person has a very deep understanding of, the international standards that establish the anti-money laundering framework, the country standards, the risk, how to do risk assessment, how to train the staff that are under him or her. And then you'd also be looking at the operational staff at the operational level, the relationship officers or managers that are involved in the onboarding of clients and customers. What do they need to know? What do they need to be able to identify at the point of even bringing the customers in? And for example, if you are engaging a politically exposed person, you need to know that the person is a high risk from the beginning. What are the measures you need to put in place when you are onboarding that person? What are the details you want to take down? So that's how I'll look at it. You need to do the training in that tiered manner so that depending on where the person is acting, they are fully aware of what they should be looking out for. And then in terms of the subject matter, I think I touched a bit on that, but I also wanted to add that it's not only the FIC, because the FIC will do its bit, but as institutions, we should also invest in other forms of training. There are international bodies and even national bodies here in Ghana that do training, like the Banking Institute. There are online tools available. FATF itself, the Financial Action Task Force, it has material available on its website that we can take advantage of. Certified anti-money laundering, yes, there's the CAMS program that you can also enroll officers on, all to enrich their knowledge. So I'm just saying that I'm not saying that the FIC is not interested in training individuals, but I am emphasizing that we cannot do it on our own. And like we are saying, if we are fostering a culture of compliance, then there should be that interest as an institution that whatever we need to do for our officers and agents to understand fully the framework of what we are doing, we should be able to do that. I think I should end.
All right. Thank you so much, Swad. Thank you very much. To our dear audience, if you have any questions, kindly feel free to post them in the chat box. I see there are 1 or 2 questions. I'll come to them pretty shortly. But I want us to move to Lebo at this point in time and talk technology. The double-edged sword, as Swad puts it. What exactly is the role of technology? How can we utilize technology in this, in this struggle, as it were, to enhance our AML CFT compliance? I see in the chat box, one of our audience, Mr. JC Bright Yamwa, has asked, may we know some of the tools or technologies for AML compliance? I think Swad made us know that there are so many that we can even find on the websites of, some of the standard setting of
Yes.
Yeah. But really, to Lebo, what really is the role of technology in all of this? Are we getting it right?
Thank you so much for that. And I'll try not to promote any particular technology tool or tools that we are using. Definitely, I'll be very careful. I often joke when we talk about technology in the context of AI and machine learning, or ML. And I joke and say that in my world, AI is a accountable institution, not artificial intelligence.
I know.
I don't know much there. And ML is money laundering as opposed to machine learning. So at the same time, at the same time, as a compliance officers from an AML perspective, we are adapting to the changes, obviously, of AI and ML in the context of artificial intelligence and machine learning. So having said that, we're already seeing how, we need to also be skilled in being able to decipher what is right and what is wrong. And I'm saying this because predominantly from a compliance perspective, we use tools, technological tools, or even AI to help us foster great customer due diligence. And technology obviously should be an enabler. It should never get to a point where we use it 100% and there is no human intervention. I don't think we would ever get to that point. In fact, I hope we don't get to that point, because there are a lot of false positives that we do find when we use technology or even AI tools. And in that, you would need someone with the right expertise to come and say, this looks like a duck, quacks like a duck, but it is not a duck, when you're doing those analysis. So maybe let me just bring it back. When we use technology as an enabler, largely we use it to assist us with customer due diligence. So you'll remember with customer due diligence, we've got about 3 phases that we need to be using to identify and verify our clients, to screen our clients, and to also risk rate. Therein, we need tools to do all 3 elements essentially. But obviously the upside, there's always an upside and a downside in using technology, in that what I've found with the identification and verification, we do use a lot of third-party verification tools, which I will not talk about on this platform, but I do understand that each country would have their own. But there's also international ones where we use for screening. For instance, we all know about this, that there's the likes of your Dow Jones, your World Check, your World Compliance, that essentially has a whole list of screening lists and PEP screening that we usually use in the industry. So that's well known. But As it pertains to verification, it's quite problematic in that now with deep fakes, you would have seen that we don't know anymore what looks right. You would see an ID copy that actually looks very legit. Only when you use your third-party verification tools, you start realizing that this is as fake as it can come. So those are supposed that some of the downsides around technology, but that goes back to Doc's point in that unfortunately in instances where something looks legit, we will need to use additional tools to foster that verification, which may actually bring in a lot of costs. What I've seen from a compliance perspective is that we were trying so much to minimize costs by bringing in third-party verification tools. But now, unfortunately, we need to verify the verification tools because we don't know what looks right or not. AI cloned voices, for instance, those are things that we actually look at when we verify if this person is right. But at this point, we don't even know if it's right or not. So definitely quite a number of technologies that we should be using as enablers as we go along in our operations. But I'd really implore us to be very careful as to what it is that we use, because sometimes we get something that looks legit, but it's not quite legit. So it takes me to the point of human touch is always something that we need, because then you've got the right skill, you've got the right experience in actually seeing exactly what looks right and what does not look right. Yeah.
Okay. Thank you so much, Lebo. So I want to take another question from the chat box, and perhaps I think Mr. Sapong can address this. So Sedinam Boche is asking, how do you advise that directors handle a situation where management is engaged in ML, or where management or the company is engaged in ML or TF, that's serious activity, but hides these transactions when making presentations to the board? What questions should directors be asking? That's from Sedinam Boche, Mr. Sapon.
Yeah, Gertrude, thank you for that question. This is very practical. And for me, one of the things based upon my board experience being both executive and non-executive directors on various boards, and let me go back to managing board, being an executive director. I always tell everybody that, yes, you're going to have bad news, but never hide bad news. Just put the bad news out there right there and then. And then tell the directors, guys, this is the issue that we are having, but these are the proactive steps that we are taking. So it's unfortunate, though, that if management tries to, it's very difficult for directors to know, because directors are not directly involved in, non-executive directors are not involved directly in managing the organizations. But some of these things will come in through the third-party assurance. So you have your, let's say, regulatory bodies. Bank of Ghana would come in. FIC, for example, if they, I haven't seen FIC coming into banks, but Bank of Ghana does the regular audits. You have the external auditors also coming in. And somehow these things would come out. There's another option is this whistleblowing. If you have a whistleblower policy in the bank that allows for, let's say, employees to report these things directly to a particular line that is set up, then these things will come out. But ultimately, there's nothing in the organization that gets hidden forever. Based upon my experience, it ultimately comes out through one audit or the other. So it's very difficult, and that's where the expertise comes in and the knowledge of the board of directors come in. So as they review the reports, they have to be able to ask the right questions, and also to be able to ensure that the metrics that are provided by management, senior management, are very comprehensive, but very simple and clear to understand. So those are the things that directors or boards can put in place to ensure that some of these are not hidden. But I would advise anyone who is in middle management or executive level or director role on this webinar to make sure that, yes, you're going to encounter bad news. I mean, bad things happen in organization. which may or may not be the fault of management. But first put it out, put the bad news out, and basically says, well, this is out and this is what we're going to do. We're doing about it.
Okay, thank you so much, Mr. Sapong. This, of course, is the CGS webinar, and today we are looking at the subject of corporate governance as a tool in ensuring effective AML CFT compliance. I'll come around very soon to take some concluding remarks from each of our panelists. But before I do that, I just have, two specific questions, one for Swat first, and then the second one for Lebo. Then we'll take concluding remarks, and then we'll call it a day. Much earlier on, when Mr. Sapong was telling us about the importance of board oversight, in this, in the context of AML CFT compliance, he mentioned the fact that there's even personal liability for failing to promote or to ensure that that there's AML CFT compliant. But I just want to find out from Swat, and especially from the perspective of being with the FIC, for board members who have joined us today, is there a sanctions regime, if any, like Mr. Sapong has told us? And if there is, what is the nature of the sanctions that could be meted out to you as a board member or as a board that is neglecting their roles or responsibilities in this regard?
Thank you, Gertrude. There is, but like I indicated, it's more effective and clearly written in the financial sector. So the FIC, in collaboration with the sector regulators, that is the National Insurance Commission, Securities and Exchange, and then Bank of Ghana, have developed guidelines, and attached to the guidelines is an administrative sanctions regime where when a director or the whole board is found to be culpable in terms of any anti-money laundering non-compliance, penalty units. So we use penalty units. So it's like a monetary penalty that is awarded against the board. So we do the institution can be penalized, and then the directors or the director or board of directors, I beg your pardon, can also be penalized. So for example, it is one of the duties of the board to ensure that each institution has a set of internal rules, that is an anti-money laundering policy that contains all the rules and regulations that the institution is supposed to be going by. So if it is found that the board has neglected to ensure or approve such internal rules, it is an infraction, and you'd be liable to pay between, I think, 100, I just want to be sure, let me check. Yes, not less than 1,000 penalty units. So between 1,000 and 100,000. Yes. So the floor is 1,000, the ceiling is 100,000. And so if penalty units is, one penalty unit is 12 cedis, you can just do so the minimum you'll be paying is 12,000. Then it goes all the way up to 100,000 penalty units. And it cuts across generally for most of the infractions that the board is responsible for.
Right.
Yeah. But then let me quickly also add that we are also making strides. Like we've said, it's a progressive development. So we are making strides to ensure that similar controls exist in the DNFBP sector. Yeah. But until then, we have been relying on Section 53 of Act 1044, which is an administrative penalty section, which also sets out a tier of sanctions that we can enforce where we find that an institution is not performing or the board is not performing. But I'd like to also quickly add that we usually like to defer to the sector regulators. So you will not really find the FIC directly penalizing boards. We'd like to let the regulators do that work. We'd like to collaborate to get it done. Yeah.
Thank you so much, Swad. Also for board members out there, that's the information is very useful for you. So one of the members of our audience, Mr. Kofi Amwa Ewa, says that to him, the big challenge is getting the regulators and competent authorities under Act 1044 to be more effective in enforcing their mandates and holding offenders accountable across the financial and non-financial sectors. I think that's a fair point. So let me quickly come to Lebo. And Lebo, just since we are, this is an international platform, and since you are joining us from South Africa, and by way of your final remarks as well, are there some insights on, and I'm not quite sure, but I'm sure definitely you've had the opportunity to look into the Ghanaian system and see how the FIC and other institutions are going about their work. But are there some insights that you can share with us on how, for example, South African institutions are addressing AML CFT compliance, and if there are some lessons or if there are some best practices that you think you can share with us? That would be a good gift, a good parting gift for us as we prepare to end the webinar. Yeah, I know.
Oh, brilliant. Thank you. And then I must say thanks for this opportunity. I do hope that I do make Southern Africa very proud as well.
You have.
When we talk about compliance, really, you look at your West Africa, East Africa, and Southern Africa, and you'll realize that the requirements or what we're supposed to be complying with is quite similar.
Yeah.
And that's because it emanates from FATF recommendations. It is very, very similar. Whichever forums that we sit in from a FATF perspective, either GIABA or the likes, it really does, it makes no difference. But the point is, we're all trying to curb the same financial crime. And you'll see, even when the FATF actually provides us with some deficiencies that we need to be dealing with in instances where we are grey listed, you'll realize that the deficiencies are very, very similar. One relating to UBO, one relating to the complexity of structures and the policies and the likes. So there, from a foundational point of view, we are trying to fight the same thing all in all. But now what we've done from a South African perspective that I'm really proud of, I think our regulatory landscape is really solid. Even from an authority and supervisory body perspective, we've actually adopted a Twin Peaks model that I know that it looks at a global view as well. So as it pertains to regulation, I cannot fault South Africa at all. But I think the crux of it is definitely in the implementation or lack thereof. And that's why we found ourselves also, under the grey list. However, what we've done very well is to expand the risks that we actually have around AML. So we looked at it in a lens of, but we can't just look at banking. We can't just look at financial services. We can't look at professionals alone. We need to expand it and look beyond the sector, but look into the actual activities to which the company is actually doing, which is what I really appreciate, that it left no stone unturned. You would have noticed that even before we got grey listed, there were a lot of changes, regulatory changes on who should be an accountable institution, although that is more enforcing, but that was really highlighting to people that we are actually more engaged, or we should be more engaged than we actually are, because the layman actually thinks that they're not part of the organized crime as they should be. So what South Africa was able to do, especially through its training, I think Swad also spoke about it, very instrumental in the training, the FIC, in the guidance as well, and making sure that it provides us more and more workshops. I mean, there's no week that actually passes by without the FIC actually having workshops with us. So I think they've been very forthcoming on that. But the most very important one, which is what I would like to part with, is the concept of public-private cooperations or coordinations that South Africa has been very, very instrumental in. I mean, the likes of your SAMLET is part of that. It has been very good. And now what we're trying to do is to look at the coordination of interagency. So as much as we're looking at the FIC or the intelligence center, which gathers a lot of intelligence, we've also started looking at interagency coordinations, which should make sure that we curb every single element of financial crime from every single element as well. So that is really something that that we are proud of. But from there on, they've enforced a lot of business risk assessment, and I think that has made us think quite a lot as compliance officers, in that you can't apply a one element fits all. You need to look at each and every single activity at its own merits, and that's, I think, one angle that we're really fostering in, so that you don't have your professionals saying that they are low risk or they're not susceptible to AML just because they have not assessed as they should.
Wonderful. Thank you so much, Lebo. Very key points that you make there. And I can relate particularly with your point about the reform of the financial architecture or the financial regulatory model that we use. We are still very much using the sectoral or the silo model. We haven't moved to the twin peak yet, although I know it's a conversation that is ongoing. So we are very sectorial. Particular sectors have particular regulators, although the Financial Stability Council is at the top doing all the coordinatory works, but that conversation is ongoing. Some people like me in my research have advocated for movement to the twin peak, but let's see how that goes. So I want to take final remarks from Mr. Sapong. Mr. Sapong, because you have done a lot of for the board of financial institutions, perhaps you might want to educate Eugene a bit as you give us your concluding remarks. So he's asking that how would one notice an AML breach when money is being moved through an offshore account? So perhaps just a little education for Eugene on that as well, and then would love to have your concluding remarks. Thank you.
Yes. Basically, in terms of monitoring, we have suspicious transaction monitoring, as well as basically we recognize that those type of transaction, moving money out of the country or international trading, is a high risk area. So basically, what financial institutions would do would have thresholds in terms of limits that if, let's say, so much money is moved frequently over a certain period, then that transaction is flagged. So that requires systems to be able to do that. And then once the transaction is flagged, it's up to the compliance people to engage the customer or do further investigation to come to an understanding in terms of the type of transaction that is involved. So that's how you identify these things. Now, in terms of concluding remarks, basically this area is subject to continuous improvement. So it involves a lot of money, as we've always talked about. The board must strive for continuous improvement. So I've managed banks that are completely, I would call them down and out, transforming them from next to nothing and getting to that level of where the compliance function is properly one of the best in practice as far as peer banks are concerned. So the key is making sure that the organization is making progress in terms of implementation of appropriate AML, CFT regulations, and improving upon it as you go along. So it's work in progress. You can't get this done within a day, within a year. It takes a number of years. And based upon my experience with GCB Bank then and NIB, it takes years, to the point that Bank of Ghana would now come to the organization and say, oh, yeah, well, you guys are good now. So that's been my experience. And so people should not be discouraged. Yes, of course, there's the tension between the compliance and management going to the board for funding for the latest technology, but these things are very expensive. So you work your way out until you get to that point.
Thank you so much, Mr. Sapong. It's so useful to benefit from your experience. Very, very practical and insightful points there. But I think we'll take final comments from Dr. Joseph Franz as well. Doc, you've done this all your life, and I know that although you're retirement now, you are still actively, observing the trends and what have you. So by way of final, comments in a minute or two, what would you want to share with our audience as a key takeaway? Thank you.
Well, thank you very much. I must say that institutions should invest heavily into data and data analytics, and if you like, risk culture. We're not just compliance systems and so on. We are moving away from just compliance. we are moving away from compliance, probably to effectiveness and so on. And I must also say that lower tier institutions can look at the risk architecture where they can collaborate and have infrastructure which can be shared. Risks, like they say, is more effective when it's shared. It's not like trade secrets where you see each and every one of the institutions holding on to their trade secrets. Here it's like others will say, it's all I do for yourself thing. You have to share it, and that's when it becomes very effective. Finally, I would say that effective AML should be risk-driven, and it should be intelligence-led, and it should be capable of detecting and preventing real financial crime, and not just documenting compliance reports. So thank you very much.
Thank you, Doc. And then, of course, to end on a very, very high note for us, Swad, any final comments?
I'd like to say, I'd like to encourage us to continue to pursue learning. Like we have all established, the AML landscape is quite wide. There's a lot of things that we need to become familiar with to be effective, as Doc is saying. And I'd also like to emphasize the fact that this fight against financial crime, anti-money laundering, CFT, counter-financing of terrorism, is a national effort. Even though the FIC sits at the center of it, it belongs to all of us. At the end of the day, we just underwent mutual evaluation and we are still in the processes back and forth. Eventually, when a verdict is given, it will not be FIC, it will not be SWAT, it will be Ghana. And so I think that we should also have that at the forefront of our thinking and our decision making, that at the end of the day, this is something that we are all doing in our respective spaces, but for the benefit of Mother Ghana. And I'd also end on the note that FIC is ever ready to partner with anybody related to compliance, related to risk assessment, whatever genuine, I want to emphasize, whatever genuine challenge you have that you feel the FIC can assist you with. Our doors are always open. Do feel free to come in, and we are ready to collaborate with you.
Thank you so much, Swad, and thank you so much to our audience. So this has been the Corporate Governance Series. Sorry, this has been the CGS webinar, and I'll explain to you why I had a slip of tongue. Our topic today has been corporate governance as a tool in ensuring effective AML CFT regulatory compliance. This is an initiative of the Corporate Secretarial and Training Services Limited. This is not the only platform that we have. One of our very useful platforms is also the Corporate Governance Series, where we partner with the GIMPA Law School, the Institute of Directors Ghana, as well as other institutions, to have sustained discussions on corporate governance in Ghana. So please follow us on our social media platforms. We were joined this afternoon by Dr. Joseph Franz, who was formerly head of financial stability at the Bank of Ghana and currently partner of Franz Norman and Associates. We're also joined by Mr. Samuel Sapong, who is currently the managing partner of ORG Resilience Consult. Also, Swat JB Amegavi, who is a legal officer with the FIC, join us. And of course, we had Lebo Hang Tawabo. Oh my God, Lebo, I'm really going to reach out to you after this. But Lebo, like we have all come to know her, Associate Director, Anti-Money Laundering Compliance Officer with KPMG, South Africa. Thank you so much. I want to say a big thank you to the FIC as well. Swad, please extend our appreciation to your team for their support in this regard as well. So ladies and gentlemen, I want to say a very big thank you. Some key points before we go from the discussion with our panel members. Let us prioritize as boards, let us prioritize AML CFT compliance, and let us be very proactive in that regard. It is important that we have diversity on our boards as a way of winning this fight. Also, as institutions, we need to be aware of the money laundering risk that you are exposed to or that we are exposed to so that we can plan accordingly. Risk management, our panelists have told us, is very, very, very important. So it's something that we need to pay particular attention to. The role of regulators is key. It looks as if here in Ghana, the regulators within the financial system are doing excellent, but it's important that other regulators outside of the financial sector are also more actively involved in that fight. And of course, we also need to use technology effectively. But in doing that, we don't have to forfeit human engagement. And like Swat told us, let us pursue continuous learning. This is a landscape that is very wide, like she said. So it's important that we take advantage of all the learning opportunities that can come our way. It is only through that we can win this fight against money laundering. So thank you very much. The video or the recording will be sent to our email. So in our quiet times, we can play and muse over the key things that we shared. So from myself, the entire team at CSTS, do have a wonderful rest of the day and live well. Bye-bye. Thank you so much to our panel members for joining us. God bless you so much. We are truly, truly grateful.
Pleasure.
Okay, bye.
Thank you.
Thank you. Have a blessed one.
Bye.
Bye.